Welcome folks, this is a market review for Euro USD. Yesterday we had, in the evening we had FOMC, which pushed price to the upside. So we had two volume imbalances. So we had this one and we had also this volume imbalance. So today we had this run high into this inefficiency and aiming for the buy side. So today in the morning price we gapped down, as you can see the opening price for today and also the opening the closing price for yesterday are not the same, so we gapped down. So we go over to the 15-minute chart. So today we had obvious setups. So we had pretty much of a consolidation during Asia, and during the 2 to 3 o'clock silver bullet we had this run to the downside. It was a stop hunt. So we had this run, which was a false move, which we called the Judah swing. So we had this run to the downside, and also we had this little efficiency right there. So we had that. So during London Open we had already taken sell side and there was buy side, opposing buy side. So we had this run high. So this was the silver bullet. So after taking sell side and the time aligns with ICT KillZone, which is from 2 to 3, or you can extend it to 5 a.m. So we had this run high taking out that high. So we had this a breaker. So we had a low, high, lower, low. So these they were up close candle. This one that closed higher than any other bullish candle. You extend it through. So we had that, and as you can see, we had quite a reaction. So in the market. So we had so many things. So as you can see, price got support from our breaker and then an aggressive move to the upside. So we had also these the order block, which is in alignment with our fair value gap, our order block, our breaker block. Sorry. So as price was coming down, we were anticipating for longs into the fair value gap, the daily fair value gap. So if we go over to the 1 minute and we see how we could have framed some entries for the London Open KillZone. So we had that. So this is a fair value gap, but right now it doesn't seem to look like a fair value gap. But as you can see, while we were down here after taking sell side and trade stops from yesterday and in the morning, we had this run high and then moved to the downside. So when we saw this was a good idea for you to frame some entries. You could have got into the market aggressively at this low or inside this candle, because you can also say this is a breaker of a 1 minute chart. So if you extend this, as this candle was digging inside the breaker, you could have been going long right there. So we had check that. This would have been long position on the stop just below that low, aiming for the opposing buy side. So we had that and we had another run higher into, but did not enter into the fair value gap. So this denotes the fair value gap, daily fair value gap, and we'll close that. So we had that. So this was a 7-hour trade, just aiming to taking out this high. So we had this run high, and then we had the inversion fair value gap. Now this is classified as an inversion fair value gap, whereby when price comes back into the gap, you want to see price remain on the upper half of the gap. And we also had these order block. So whenever you see an order block inside of a higher time frame fair value gap, that is a very strong algorithmic price delivery, whereby you could be going long inside. As you can see, no candle closed below the midpoint. So this purple line denotes the midpoint of the inversion fair value gap. So with that, then we got support from that. This could have been you could have scaled in to and putting your take profit right there. So we had that run high, then we moved lower, and also we had this, if you can remember, this is a breaker, where we denoted the high of the breaker using this line. So as you can see here, we went a little bit inside the breaker, but it was only to take out this relative equal loss and working itself through inside the fair value gap. So we had that, and then price was sent higher into the fair value gap, whereby this was at around 7. So our targets would have been to the midpoint. This purple line denotes the midpoint of the fair value gap, the daily fair value gap. So we had a clean let me see, a 14-hour trade, whereby you could have framed some entries and held on. So the way I usually say is, whenever you are anticipating for a run high and maybe you see such a high, you could be taking partial right there and then going to break even or even better. But now, trailing your stop, you have to be very careful whenever you're trailing your stop. So your stop, maybe if we had this inversion fair value gap, and we know that price would it could, but mostly it would, if it's really bullish, it will remain on the upper half. So your stop should be below this volume inversion fair value gap. So when price was coming down, it wouldn't take you out and then move into your favor. So you have to be very careful in terms of wherever you are putting your stop. So trailing stop, you have to be very careful. And when this happened and it touched the lower end of the daily fair value gap, your stop should have been below this midpoint, because you can see we had a stop rate right there, stopping people, and then we had a nice run into the fair value gap. So right there, that was the silver bullet, and it was quite straightforward. We were anticipating for buys because we had this PDRA, which is a premium PDRA, which was the buyers for the day, and then we had this run high. So when price got into the midpoint of the gap, we saw a sell-off, which was we could have traded this because it's around the ICT KillZone, which is the New York Open KillZone, which is around 7 to 10. So as you can see, this was around 7. So when price got to this area, you can anticipate for shorts. Even though you are bullish, you can trade that, but anticipate for shorts. Don't stick to a narrative that you are bullish. No, you don't take such trades. This would have been a good trade for you, aiming for trail stops, and as you can see, it came below this low and took out this low and moved on higher. So the way we could have framed this entry as a silver bullet is by we had these highs, they were taken right there, and then price showed us the willingness to wanting to go down. So we had this inversion fair value gap whereby price didn't respect it at first, but you could have used that, because when the price comes back, it will act as resistance, and then it could be going short right there. And then we had this gap also, and we had already taken buy side, so there was no need for price wanting to go back up higher again. So we had that would have been your entry, and then your stop would be right there above that high, aiming for the sell side. So we had that, we had this low. We could be aiming for something in between. So we had that, which is essentially it's a 8-hour trade. So we had that, and then this would have been where we could have taken some partials, because we've already taken out these lows. So taking partials right there, going to break even, and waiting for a stop and for a continuation to the downside. So your stop, after taking trail stops out, you could have placed now your stop around there and wait for your TP to get hit after taking a partial. So partials are the only it's the only thing that would help you hold on to a trade without you getting nervous or getting impatient. So we had that, which is the you can classify it as a Judas. You can still trade that because it tricks some traders to go short, but it's you're going short in and out of the market because you're anticipating for longs, because we had the buy side that resides above the gap. So as you can see, price respected the midpoint of the gap. So we had that, and then we had I think news news at around 8:15 for Euro, and also at 8:30 for New York, and 8:45 also for Euro. So we had the stop hand. We worked ourselves inside the gap, and then aggressively we moved to the upside. So we had this run high. So I guess that's it, folks, and a very nice run. We have not yet traded into the buy side. This blue line denotes the buy side. As you can see, we have already taken sell side right there. So we can anticipate for longs taking out the buy side. So again, this is a good day whereby it was profitable. Of course, you could have traded this after taking out the sell side right there. This the news event. So when you saw this high being taken out and this candle was, you see the down close candle right there, it was moving to the downside. That could have been your entry, and aiming for the buy side right there, and also the high of the fair value gap, and eventually for the buy side. So today we are anticipating a run high into that high, and then maybe a little retracement, which will be in between the PM session. We can look forward to that. So I guess that was it.